Hello, my friend. Welcome to the True Secret Sauce series. Let me start off with the first quadrant. Basically, I use a 4-quadrant chart and will begin with the first quadrant. So here it is. The chart is a very good one and will get you lots of winning trades and is very simple to understand as well. Let me start off with the top portion of the chart. What we are seeing right now here is the Bollinger Band, and Bollinger Band is one of the price-based technical indicator. It's a very popular one, and just by the look of it you can say it acts like a banks of a river. Water flows within the banks of the river most of the time, and during a flooding or a hurricane, water breaches the banks. You can see here, water breaches the banks every now and then it resumes its path within the banks of the river. The way we trade that is, if the price of the stock is on the upper end of the band, then that means the most likely move is going to be down, and if it is at the bottom end of the bands, then the most likely move is up. So that's it, simple. When the price is at the top end of the band, it is likely to go down towards the mean, and if it's the bottom end, it's going to go up upward towards the mean. Very simple to understand. So when the water is calm and narrow and the water starts flowing, what happens is slowly it gets narrow. A narrowing Bollinger Band represents calm markets, meaning there's not much of move. And what happens in a calm market, the next one is there is likely to be a wilder moves with a lot more price action. So you can get prepared accordingly. Look at this small band where the band is getting narrow and narrow, and similarly it is getting narrow and narrow here, and what follows is a bigger move. So this is one of those things, and the way you trade this is, whenever it is in the upper end of the Bollinger Band, it's an indication to go short, and when it is in the bottom end of the band, it is better to go long. The next indicator, which is the RSI indicator. RSI is also called Relative Strength Index. On the bottom of this chart, you can see two of them. One is a 3 days, and then there is a 7 days. This is also a very popular index, and when the price reaches the upper band, it's considered as overbought and is considered as oversold when it is in the lower band. Pretty simple. Both of them are pretty simple. The default settings is when the upper band goes to 70, it's considered as overbought, and when the lower band gets to 30, is considered as oversold. In our case, I have actually modified to make it little extreme. If it goes to 85, it's considered as overbought, and if it is going down to 15, I call it as oversold. The reason why I put that is this will help me to eliminate whiplashes. So there you have the 3 days, and I have put 85 and 15. 85 is upper end, 15 is the lower end of RSI, and I have two time frames. One is a 3-day time frame and one is a 7-day time frame. Bollinger Band, I have not changed anything. It's exactly as provided by the software platform. So here you have where you notice that wherever it is in the upper end, the next likely move is down, and when it is in the lower end, the next likely move is up. The time frame that I'm using is 3 days, and I also use a 7-day time frame. Remember these Popular bands like RSI and Bollinger Band are extensively used by algorithms as well. So whenever it touches these extremes, there's a good chance the stock prices reverses and moves, but not all the time. I have to say that you can be quite flexible with these indicators as long as you're consistent in using them. Other popular indicators are stochastics, MACD histogram, etc. Most of them track the price movements and in a bigger picture come to very similar conclusions. Some of them are early indicators, some of them are lagging indicators, some of them are reversal indicators, etc. You're free to use different type of indicators, try and play with them, and whichever is comfortable you can use. For me, Bollinger Band and RSI are quite comfortable. So let me show you how to add. All you have to do is on a Thinkorswim platform, just go studies, edit studies, and whichever you want to add, you want to say MACD, you can just add MACD, and you have to go there to the widget and change the parameters as necessary. So what is the pitfall? It looks clean and neat. See, here is a chart that I used as an example. I'll use a chart Tesla. Tesla has been on a roll, shooting up quite a bit, and that is exactly when the Bollinger Band, RSI, etc. starts to fail you. For example, in this example, just look at here. At this point, it's on the top of the Bollinger Band. RSI is also an extreme category, so it's natural inclination for all of us to go short or predict that the next price move is going to be down. And what is the price here? It's about 200. And what's the date? It's on 12/12. What happened? It kept on moving up and up. RSI kept on being an extremely overbought levels, but it continues to stick all the way till here, where it has touched $256 on 123. Just in 1 month, the stock price had moved from 204 to 250. Imagine what would have happened if you were on the wrong side of the trade. If you were shorting the stock just because the indicators said go and short. I mean, this is a very, very realistic scenario that happens all the time. Bollinger Band and RSI works well most of the time, but when it does not work, it means the stock is on a strong uptrend and you do not want to go against the stock. That's what I was been mentioning. See, from here to here, it has gone off so much that it can hurt you as a trader. Just to let you know, this is an educational video to learn trading. Please do not treat this as any form of trading advice, and happy trading.